The RBI is weighing on whether to let the lenders remotely disable their smartphones bought on EMIs if the borrowers default, and that has sparked a debate over consumer rights, privacy, and the risks of aggressive lending. A recent Reuters study showing that about a third of all consumer gadgets, including cell phones in India, are purchased through EMIs. If a borrower stops making their EMI payments on their financed phones, or is it possible for banks and lenders to remotely lock the phone? The Indian Central Bank is now considering this matter. The Reserve Bank of India governor at the post-policy press conference has said that the central bank is currently reviewing a proposal from the banks and the NBFCs to permit such digital collateral enforcement. In response to a question by a Z correspondent, Malhotra said such a proposal is currently under discussion and we are getting views both for and against, quote unquote. He added, quoting further, our effort is to ensure that that consumers' rights are maintained and in terms of data privacy. The consumer's interest is paramount while we consider the issues faced by banks, quote unquote. The RBI Deputy Governor said, and I'm quoting, there are pros and cons on both sides in terms of balancing the customer rights requirements, data privacy, and also the creditors' requirements. So we are examining the issue and will evaluate the pros and cons and will take a decision at an appropriate time, quote unquote. The current laws do not expressly permit this practice, placing it in a regulatory grey zone. Also, only last year, the RBI decided to stop lenders from locking mobile phones of defaulting customers. However, the questions on this come as the RBI is set to revise its Fair Practices Code in a few months. So the debate rages on between consumer privacy versus lenders' recovery plea, and on whether the central bank will allow this practice. To stay up to speed with the latest news, download the WION app and subscribe to our YouTube channel.